Hello guys, welcome back to our value investing channel. Today we are going to discuss about Unilever. It's one of the must-have company because it's a really historical one. We are going to discuss in a while how fantastic is the business of this company. We are going to see how many brands are owned by this company, and we are going to see that there is a really global diversification with those brands and the revenue of the company. So it's a really fantastic business, but we are going even to discuss about data of the company, so analyzing what is the balance sheet of the company, and at the end analyzing even the price action of the company to check what price we should buy this company and what kind of strategy we can apply when we buy the company. But first of all, we have to start speaking about and understanding what is the business of this company. So let's check just the website and let's check all brands that are owned by this company. This is the logo for the one that didn't know before. It's the main competitor of Procter & Gamble. If you know the other company, those two are the main one globally speaking about all those kind of product that we are going to see. In fact, when we select all brands of the company, then here we are. There is a list that is really huge. We have a 9-page of different brands that we can check. So there is a huge selection of many brands. Some of them are global one, some of them are just focused in some countries, but the selection is really huge. This is a big added value to the business of this company. All those brands give to the Unilever company a really straight position in the global market, and we can see here from the chart how all those brands and products are diversified in different categories. We have hygiene one, and we can see even how they performed last quarters. And for sure we have second quarter that has had a big improve on the revenue in this sector because for the pandemic problem. Every one of us went to consume more hygiene products. In the other hand, we have laundry that it's around 80 billion business, but this business is quite flat. Then we have prestige, but is a quite small revenue. Much bigger is personal care, 14 billion, and we can see here that actually the trend is quite negative. On the other hand, we have in-home, and as well it takes 15 billion in total, and in this case the trend is quite positive. Finally, out of home takes 4 billion, but even in this sector the trend is quite negative for sure, because we are unable to go out of home in this period. But for sure, going forward for the vaccine and everything, this kind of business will recover. And it's not a surprise if we can see how has grown sales by e-commerce. So it's really a positive thing, because we can say that Unilever is able to sell with their partner in e-commerce. So it's really a positive thing for sure, because according to what is the situation right now, it is quite difficult to physically buy things. It's really good to have this channel in e-commerce that it works really well. Then we have seen that the business side, it's really a strong one, and the company, it's really spread around the world. But we need to take in consideration the fact that if we look at revenue, that in this case is this blue line, this is almost flat, around 50 billion. And for the earnings, things do not change. Even earnings are almost flat, and in this case are around 5 billion. And this leads to have a profit margin around 11%. That is not a huge one, but according to the other company in the sector, it's quite good level to be. The positive thing is that if we add this pink line tells us what is the free cash flow, and we can see that even the free cash flow, it's absolutely there. It's around 5-6 billion, so it's really stable, and it means that the company is really profitable. The really negative things, according to me, is that we have already seen how her revenue are really flat, and we can see even here, according to the analyst from Simply Wall Street, that even the projection for the future are quite flat. So the expected growth is from the 50 billion right now to 56 billion in 2025. So we can say that the revenue will be almost flat, and as well earnings will grow, but a really low percentage. So with this kind of company, we have a really good established business, but we cannot expect an high rate of growth, unfortunately. Even if we move to balance sheet side, we have to take in consideration debt as a risk, because if we can, as we can see here, the total debt is around 50 billion and is more than double of equity. The only positive thing is that companies still have 6.4 billion in cash, and this cash is really useful for the company because it's needed to make other acquisition. In fact, one of the main way to grow their business is through acquisition for this kind of company. It's something absolutely normal, and we can see that Unilever is walking through this path, and year over year it spends many money on acquisition. Is something good because it can lead to grow the business. And finally, we can come to see the most important things maybe for this company, that is the dividend. In fact, as we have seen before, the free cash flow still positive and still constant through the years, so it leads the company to give some good dividend. In fact, if we can see here the light green line, we can see that dividend year over year it goes always up. But at the same time, we need to understand that the payout, that means the amount of earnings that are needed to pay this dividend, it's already at 78% for this company in this moment. Its estimation tells us that this ratio will go down to 68%, but anyway, it's a quite high ratio. It means that the company gives away its main part of their revenue, so it means that there are a few amount of money that could be used to improve the business, to make new acquisition. At the time of recording, the price of the stock is around £39.40. This leads to have a 3.73% in dividend. That is a really good dividend according to me. Finally, going to the price action, we can see that since 2010 the price of the company just went up, but it went up till around beginning of 2017. In fact, we can see that the price is in this horizontal channel since the beginning of 2017. We had some minimum around £37, we have some maximum around £50. This is quite normal if we consider that the revenue of the company are not really growing anymore. So when we come to this kind of company, for me there are two possible strategies to invest in. First strategy could be simply buy and hold, to take their dividend. In fact, if we can say that intrinsic value for this company is something around £40, so we know that at this level we are buying the company actually at a fair price, but this kind of company is difficult to find them to a discount, really discounted price. So could be a good possibility to buy now at this price is quite fair and hold it for a very long time and take the dividend. In fact, as we can see from the chart, this level of price, even if it is something that is near to the fair value, it's difficult to buy around 39. It's just 6-7 times in the last 3 years that the price went so down. So I put as a green buy area everything that it goes from $41 to $39 more or less. On the other hand, the second strategy, if you don't want to keep the company for the long time, then you can use the buy area and try to reach a level around £44 that gives you a 10% of gain, or a level of £48 that gives you a 20% of gain. It is something that is absolutely achievable for this kind of company. Actually, I do manage 2 portfolios, and one of them is built to get dividend. I can say that I bought this company at this kind of price to get dividend, so I will hold the company for the long time and get the dividend. On the other hand, I have a second portfolio. You can see that portfolio by the link that you can find here down below in the description. This portfolio is more oriented to the growth, and in the strategy of this portfolio is to have a core part with all growing company and a satellite part. In this part I can manage some trade. For example, could be Unilever in the second strategy that I told. It means to buy the company around 40 or 39 and take advantage for the possible upside to 44 or 48 and get this 20% just for a trade. Finally, it's up to you to choose what fits better to your portfolio, your personal strategy, your personal risk. Please do not take those as financial advice. Those are just my thought, and let me know your thought as well down below in the comment. It's nice to share our idea and take advantage from our different point of view. Don't forget to click the like button to help this channel to grow. Subscribe if you didn't already, and see you in the next video.